Morning in the Mumbai News Center. I'm Sonal Bhutra and you're watching Power Breakfast. Those are the top headlines that we are tracking this Monday morning. A lot to catch up on, right? But first up, as always, let's take a look at the Asian markets. They are largely mixed in trade today. But look at some of these indices. Hang Seng, for instance, is up 3.5% as we speak. And this is after the 7% rally that this particular index saw in Friday's trading session as well. Remember, on Friday, it was high by 7.7%, seeing its best day since March 16. So strong moves as far as the Hang Seng market is concerned. Taiwan too is doing well. That index up 0.9%. Apart from that, even Shanghai is doing well. We have Straits Time up in the green, up around 1%. It's only Nikkei, which is actually in the red right now in the Asian markets. That one is down 0.5%. And as a result of all of this, the indication from SGX Nifty is that we will start in the green, although it will be a flat start with some positive bias. So let's see which way things go. For now, there is an indication of some strength in our own markets as well. So let's talk about the US markets now. Wall Street ended Friday's trading session modestly higher, with the Dow Jones up 32 points, the S&P gaining 36 points, and the Nasdaq Composite surging over 1.5%. The S&P rallied nearly 6% last week, its best week since June, while the Nasdaq Composite gained a little over 8%. And the Dow Jones advanced over 4% in the week gone by. CNBC's Steve Kowak gets us a wrap of all the action on Wall Street.
Stocks ended the day higher in another rally day on Wall Street as all three major averages posted a week of solid gains. The Dow ended the day higher. The S&P ended the day nearly 1% up in its best week since June. And the Nasdaq added about 2%. The crypto exchange FTX throwing in the towel today, filing for bankruptcy after a tumultuous week. The CEO and founder, Sam Bankman-Fried, stepped down from his role after the rapid downfall of the $32 billion company, leaving investors and policymakers calling for more regulation. Crypto investors have lost a whopping $2 trillion over the last year. Twitter appears to have paused its $8 a month Blue subscription service after users were abusing it to impersonate brands and famous people. The service, which allowed people to pay for a verification checkmark, was launched earlier this week on the iPhone app. In a rare move, the Federal Trade Commission issued a warning that it's watching Twitter with, quote, deep concern to see that Musk complies with Twitter's agreements with the agency. That's the action from the U.S. market. Back to you in Mumbai.
All right, that's all the update from the US markets. In fact, let's also hear out what Bob Dole of Crossmark Global and Aditya Bhavi of Bank of America had to say on the state of the US market and lower than expected October inflation print that was reported last week.
We have to remember that bear market rallies are vicious. They're stronger than bull market rallies. I don't know that we've slain the bear yet. We still have inflation that is mid to high single digits. We still have how much will earnings come down? Are we going to have a recession or not? The whole debate about how far the Fed's going to go that you just talked about. Hard for me to say that it's an all clear sign, but I have to say yesterday's rally was obviously big in magnitude, but the breadth was pretty impressive as well. I think the jury's out. I had been, as a portfolio manager, slowly adding cyclicals and letting go some of those dependable stocks, HMOs, defense stocks. And the question is, do I need to quicken that pace? The jury's out. Well, I think inflation has peaked. I think yesterday, for anybody that was questioning that, the evidence is in. Doesn't mean every piece of it has, but overall it has. But we're still stuck with a 6 or a 7 handle, which is totally unacceptable. The Fed has more work to do. They've raised rates at the fastest pace in history, and we know that the lagged effect on the economy from Fed rate changes is long. And so we don't know what the impact's going to be. I kind of hope they do, after 15 December, take a little pause, assess what they have done and what it does for the economy, and then we'll get some better read.
Core goods prices should continue to, moderate and then fall because they're very, very dislocated from pre-pandemic trends, and core services will probably remain sticky for a little long. But for the Fed, this means they can probably slow down to a 50 basis point hike in December. That was our forecast anyway, and now markets have moved towards that forecast.
Okay, all right, that's the opinion coming in for the US markets. But to the final update on our global market wrap this Monday morning. European markets closed mixed on Friday with the French CAC up 37 points, the German DAX gaining 78 points, while the British FTSE closed with 57-point loss. The UK economy contracted by 0.2% in the third quarter, signaling the start of a long recession. However, the contraction was less than analyst expectations of 0.5%. Remember, the Bank of England last week forecasted the country's longest recession on record, suggesting the downturn in Q3 will likely last deep into 2024. UK Finance Minister Jeremy Hunt will be announcing a new fiscal policy agenda this week, which is expected to include substantial tax increases and spending cuts as well. Okay, all right, that's the global market wrap. How will these overnight cues impact our own markets? We have our research team joining in bright and early to tell you just that, the trade setup, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. First up, Vivek, let me come across to you. What is the market setup looking like today?
Well, good morning. It's a largely positive setup that we are looking at going into this week's trading session. Like you mentioned, most of the U.S. markets actually ended in the green with a positive bias. And along with the U.S. markets, when you're talking about the European markets too, they also largely ended mixed up with a positive bias. When you're coming across to gold prices actually saw a bit of a rally, up almost 1%, and they're trading near a 2-week high. However, when you're talking about crude oil prices, they too rallied, and in fact, crude oil prices were up almost over 2.5% in Friday's trading session. Coming to the dollar index, continued its decline and down almost 1.8% to 106.29 as far as Friday's trading session was concerned. Coming closer home, what is it that will drive markets? Q2 earnings continue, remember, and today some key numbers including ONGC, Grasim, IRCTC, NMDC, Biocon, Bharat Forge, and Apollo Tyres are some of the key companies that will come out with their earnings. Some economic data too to keep an eye out for. The WPI as well as CPI monthly data is something that markets will keenly look forward to. And Asian markets are indicating largely mixed, but again with a positive bias. SGX Nifty too is indicated a muted gap-up start for the Indian markets.
All right, okay, thanks a lot for that, Vivek. Surbhi is joining us now. She'll talk about all the stocks that will be in focus today. Surbhi?
Last leg of result seasons, and we have quite a few to track today. The first one is LIC, where the company has posted strong premium growth and VNB growth. The net premiums are up 26% on a year-on-year basis. The APE is up 45% sequentially, and the VNB margins have come in at 15.2% versus 13.6% last quarter. Next is ABB, where the revenue is up 19% on a year-on-year basis. The EBITDA is up 25% at 212 crores. The margins have come in at 10%, and PAT is up 69% at 203 crores. Next is Z Entertainment, where the revenue is up 3%, the EBITDA is down 27% at close to 300 crores, and the margins have come in at close to 15% versus 21% same time last year. Next is Manappuram Finance, where the AUM is up nearly 8% on a year-on-year basis. The gold loans are up 3% on a year-on-year basis, and the net interest income, that is up close to 13% on a year-on-year basis. Next is Aurobindo Pharma, where the revenue, margins and profits all have come in below estimates. The revenue is down 3%, the EBITDA is down 33%, and margins have come in at 14% versus 20% same time last year. And lastly, Astral, weak numbers there. Revenue is down 2.4%, the EBITDA is down 28% at 157 crores, and margins have come in at 13.4% versus 18% same time last year.
All right, okay, Surbhi, thank you so much for that list. Finally, Mangalam is joining in with all the cues from the F&O space. Hey, Mangalam.
Good morning. So it was a stellar rally that we saw on Friday's trading session, and the SGX Nifty, though off morning highs, is indicating that the start would be a mild positive today. And, the big part is that on Friday itself, we did see a big gain come by on HDFC Twins, Reliance, as well as Infosys. Those were the stocks that, contributed 80% of the Nifty's gains. And when these stocks move, you know that the FIIs are buying in cash market. They bought almost 4,000 crores. The DIIs went ahead and bought as well. So net institutional flows of over 4,500 crores tells you that, it's the highest that we've seen all the way since February 2021. And why just that? Even in Nifty futures, the premium was already high at 64 points. That increased further to 74 points. And that's telling you that the FIIs bought in index futures as well, almost 3,000 crores on Friday's trading session. They added 16,000 longs and covered 14,000 short contracts. So in just one trading session, the FII longs jumped by 9 percentage points from 53% to 62%, and the shorts, conversely, HDFC fell from 47% to around 38% as we speak. Importantly, if you just take a look at the way the open interest changed, it showed that there was more action on the Nifty Bank than the Nifty. So that will be an important index to track even in today's trading session, given the weight of HDFC Bank on that one. In terms of calls, they bought more calls and at the same time they sold more puts. So that's telling you that overall they are a lot more optimistic. As far as the levels are concerned, 18,300 and 18,200 puts were extremely active. So that's telling you that 18,150 to 18,200 is an important support zone that the bulls are looking at right now. While on the way up, 18,500 and 18,600 calls were active. And that's telling you that will there be a bit of a hump closer to the all-time highs for our market or not is a question that we'll get answers to only depending on the way these stocks perform. We have Infosys and HDFC, which saw short covering on Friday. So whether they bounce back further today or not is the big question. And a lot of shorts added in a couple of mid-caps, GNFC and Indian Hotels. Let's see what happens here as well, because the mid-cap index was an underperformer in an otherwise stellar day on Friday.
It was. Thanks a lot for that, Mangalam, Surbi and Vivek, for joining us and prepping us up for this trading day ahead. With that, we'll slip into a short break now. Up next, we'll get to excerpts from CNBC's exclusive conversation with Kumar Mangalam Birla and his take on the cement industry and the paints business as well. Stay tuned. Welcome back. You're still tuned into Power Breakfast on CNBC-TV18. In key macroeconomic data, India's industrial production surpassed expectations in September. IIP growth stood at just above 3% compared to a CNBC-TV18 poll, which predicted a growth rate of 2.3%. While the growth in mining, manufacturing, electricity and capital goods saw a significant jump, but growth in consumer durables and non-durables continued to contract. Meanwhile, the CPI print for the month of October is due today. According to a CNBC-TV18 poll, October CPI is seen at 6.73% versus 7.41% in September. Core inflation is seen at 5.9%, while food inflation is expected to come in a range of 6.9 to 7.4%. Moving on with that to an exclusive conversation, Chairman of Aditya Birla Group, Kumar Mangalam Birla, says he does not expect any big disruption in the cement industry, even as Adani Group makes its foray, adds that they are committed to capacity expansion of 22 million tons for Ultratech cement. Birla also talks about the paints business and says they aim to be the second largest player in a few years. Listen.
You're obviously investing massively in your cement business in India. The Adani Group bought out Holcim's India assets. What's the next phase of growth looking like for Ultratech?
So I respect the Adani Group. I think that their execution skills are great. We continue with our plans as usual. Since then, we've announced a capacity expansion of 22 million tons. And, our plans remain unchanged. When you have a new player in the industry, I'd like to think that they wouldn't want to be unnecessarily disruptive. They've made a very large investment. And they've been a responsible player by and large in the businesses that they have gotten into. Our cement business has been around for about 40 years, very strong roots across the length and breadth of the country in terms of our, for example, the entire ecosystem, vendors, suppliers, our dealers, wholesalers, all of that. So it's a very complex country to work in, and we have very firm roots in all our businesses like we do in the cement business. It's not new assets that have been created. It's assets that existed for a very long time, some of them, that have changed hands. So we're not expecting any big disruption to happen. And it's always good to have smart competition.
Always good to have smart competition. Are you foreseeing that in the paints business as well? You're foraying into paints. Again, the same question. What's your long-term vision and plans with this business segment?
So, in this case, it's a little different because in the paints business, you already have a very strong incumbent who's been there for many years, who we respect very much. And our ambition is to be the second largest in the next 3 to 4 years. There is in India a very striking move in many businesses from the unorganized to the organized sector, which is happening in the paint industry as well. Consumption of paint per capita in India is very low, not just compared to the rest of the world, but also to the rest of the region in terms of geography. After the pandemic, people want to have their own homes. Like I said, you've got more and more affluent middle class who want to own their own spaces, their own homes. So there is a very clear case for growth in the paints business. We also have an overlap with our cement business. Both are distributed from the same channels, which gives us, given the fact that distribution is a very strong comparative factor in the case of paints, since we have an existing distribution channel, that kind of gives us a very clear right to win in the sector.
All right, that's the word coming in from Kumar Mangalam Birla. But with that, we'll move on now. World leaders arrive in Bali for the G20 Summit this week. The war in Ukraine and its economic fallout is expected to dominate discussions. This will be the first time US President Biden and China Xi Jinping will meet face-to-face since Biden took office, and as bilateral relations languish at their worst in decades. CNBC's Martin Soong is here with what lies ahead in the meeting between the two superpowers.
We simply do not know. We haven't even nailed down a time for the meeting yet. We only know it is set to happen today here in Bali, one day ahead of the official start of the G20 Summit here as well. And as far as what outcomes to be expected, we are given to understand that there probably will not be a final statement post the Xi-Biden meeting, and that's going to be similar to the G20 Summit as well, at the end of which we are also unlikely to get a final communique. And that's been sort of the trend as this rolling roadshow and this whirlwind of diplomacy has overtaken us in the last week or so. From the ASEAN Summit, where JP is, and the East Asia Summit as well, no agreement. So what we're literally seeing is many, many member states, whether it's ASEAN, whether it's G20, etc., are divided or potentially even fractured. And a lot of it has to do with the issue of course, of Russia's ongoing war in Ukraine. So that's the situation as far as we know. So when and if that information becomes available, the time of that meeting, where it will happen, whether or not it'll be behind closed doors, whether we have access or not, whether there'll be press conferences afterwards, we simply do not know. But as and when that information becomes available, you can be sure that we'll be on top of it and we'll let you know.
Okay, all right. With that, we'll slip into a break. Up next, we'll get you all the cues from the commodity market. Stay tuned. Hi, welcome back. Still tuned into Power Breakfast on CNBC-TV18. It's time to talk all about commodities now. Manisha Gupta is joining us with all that update. Hey, Manisha, good morning.
Hi, morning. Thank you for that, Sonal. Well, I'll talk about the crude oil prices where we have seen some gains being extended. China has said that they will relax some of their stringent COVID-induced restrictions, and that clearly has been supportive for various asset classes, including commodities. And then you have the OPEC and allies, which have begun their output cuts from the month of November to the tune of 2 million barrels per day. That seems to be supporting as well. It is also about the winter demand, and the next 2 or 3 months with the kind of cold weather forecast that we are getting would mean more demand for heating oil and furnace oil, etc. And that has been supportive. Also with the U.S. annual inflation rate easing for the 4th straight month in the month of October also has done its trick. You are looking at a similar trend in the metal space as well, where copper prices are trading at a 5-month high, and the other metals like aluminum, zinc have also seen gains of 4 to 5% in the last 1 week.
Okay, all right. Thanks a lot, Manisha, for joining us. So some strength in crude oil prices is what we are seeing. With that, let's talk about the RBI now. RBI Governor Shaktikanta Das says October inflation will be below 7%, adds that RBI is sticking to the 4 to 6 inflation band, and we should not think of shifting the goalpost of 4 to 6%. Speaking at the Hindustan Times Leadership Summit, he also defended the central bank's intervention on the rupee. Listen in.
Our estimate is that India will this year grow by about 7%. The IMF has projected that India will grow by about 6.8% in the current year. And that puts India among the fastest growing major economies in the world. We have a major challenge with regard to inflation, but comparatively, if you see, our target, the upper ceiling is about 6%. The last inflation number which was released for September, the inflation was 7.4%. We expect the October number which will be released on Monday, we expect that to be lower than 7%. Any inflation above 6% is detrimental to growth. So therefore, 6% has been kept as the upper tolerance band. And the fact that we have a tolerance band, between 4 and 6%, That gives RBI enough policy space to use during times of stress. We picked up these reserves only for this rainy day. And when it rains, I have said it earlier also, you have to pick up your umbrella and use it. We didn't pick up reserves just to keep it as a showpiece in, in the Reserve Bank of India. And even at this point of time, our reserves are very comfortable. So the first objective of our market intervention in the forex market is to ensure an orderly movement of the exchange rate. Second is to anchor market expectations.
Okay, all right. That's the word coming in from the RBI Governor. And with that, it's curtains down in this edition of Power Breakfast. Stay tuned. All the market action on Bazaar Morning Call that comes up next.